This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Daniel O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, start today's show as they explain what they have seen 1 week post-WASDE for wheat and grain sorghum. Continuing the show is Daniel and Guy as they keep discussing the domestic and international grain market for corn and soybeans. K-State meteorologist Chip Redmond ends today's show as he talks about the hot weather and how drought concerns are starting to increase again in Kansas. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with an international and domestic grain market update with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much.
Daniel, as we usually talk post-WASDE with both you and Guy, what are we seeing as it's been a week since we had that report?
We had that report that came in on the 10th, and since then, not a lot of domestic change, but we've had some international factors come in strong and impact commodities overall. Guy, you want to talk on that for a minute?
Yeah, just start off with the dollar. Dollar's been a little bit firmer, but it's not taking a big run up. It's trading just above 100, about 100.5 on the index, which is a bit surprising given the elevated hostilities we're seeing in the Persian Gulf and also some things that are happening over in the Black Sea, which we'll come back to the Black Sea situation here in a bit. The other thing that's sort of driving that, both activity in the Black Sea and in the Persian Gulf, is we're seeing dry bulk freight rates take a bit of a rally. We're back up to where we were a couple weeks ago, which is approaching a 4-year high here. The index is currently at 2009.55, which that increase in freight rates is making exports a bit more expensive to our importing countries, but also raising it for some of our competitors there as well. We'll start off with wheat today and just having a quick look. There's quite a bit happening in the wheat situation. It's basically focused around the Black Sea and increased conflict and hostilities between the Ukraine and Russia, which is tightening that up. Just recap on the USDA numbers. World production was pegged at 820 million metric tons. That's down 3% from last year's record crop, so we're tightening up the total supply there. Russian production came in at 88.5 million metric tons, up slightly for the year. Ukraine production was also up about 500,000 tons at 24. What's really come into question in the last week is both of those countries' capacity to export that. They've been blowing up each other's infrastructure, transportation, export facilities, and also firing at a few cargo ships. And that's just basically shut down that Sea of Azov, where Russia exports a third of their exports come out of that particular area, which if that gets shut off, that'll lend significant support to wheat. And I don't think that's really quite priced into the physical grain market yet, Dan. We're seeing the shorts, the fund money was short. They've come in to start to cover that, which has really supported this recent rally in wheat. But we really haven't seen the physical cash markets respond to that. And if we sort of go back and look at previous events in 2010 and 2022, it would suggest we've still have potential significant upside to wheat. Now, if that sort of gets settled and blows over, well, maybe the market's pricing it quite right. But increasingly, there's concern on the actions that are coming there in Russia and the Ukraine. Just running around USDA reports to a couple other countries. EU production was left unchanged, although we're seeing significant dry weather there in France and across Europe. That number might be a bit overstated. Australia, Argentina left unchanged. India, your biggest wheat producer, came in at 121 million metric tons. That's up 3% from last year's level. And important Chinese crop was imports. Imports for China were pegged at 6 million metric tons, just up slightly from last year. So we remain fairly optimistic we're going to see some Chinese imports of quality wheat of that. From a world ending stock situation, we're seeing that estimate come in at 272 million metric tons, down 3 million metric tons from last month. That leaves our world ending stocks to use ratio at about 33% compared to 33.8% compared to last year. But the question that really raised, it is if that situation in the Black Sea continues, that could significantly take both the Ukraine and Russia out of the picture for those export supplies. And I think this is going to be a worse situation than when the conflict started. I think this conflict's sort of coming to a close probably by the end of the year. And what you tend to see is both parties tend to try to, in their last breath there before they decide to cease hostility, to do as much damage to infrastructure. And that includes grain transportation and export facilities. And that could really disrupt this wheat market more than what we've seen to date.
Well, we have a lot happening on the international side of things, nearly as much happening domestically.
Yeah, out of that report that occurred on the 10th, a week ago, the USDA made some quiet but really fairly important changes in their supply demand balance sheets overall, but also on a wheat class by class basis. Again, the overall production 25-26 marketing year last year ended May 31st, 2.964 billion bushels. This year down to about 2.6. That the July 10th number actually below that, 2.56. Ending stocks, the last marketing year, 25-26 at 920 million. Well, now we're down to 722. And most of that follows on winter wheat, reductions in winter wheat production, especially hard red. And it's just kind of startling to see that for the 2025-26 marketing year, we had 804 million bushels of hard red production. Ending stocks 437 million for hard red winter wheat production. And this year we're down to 471, almost half, down 45%. So and then the export number for hard red last year is 321 million. This year down to 210 projection. Stocks 437 last year, 308 projected this year. So I guess the thing to point out is for hard red winter wheat, taking a big hit in terms of available supplies, the ability for U.S. hard red winter wheat to be active in the world export market. Soft red also took some hits, surprisingly, in kind of a contrarian move. Hard red spring wheat, although their production's about the same, their exports are higher, their stocks are lower also. Just interesting to see who the winners and losers are on all that. So I guess overall we kind of we try to watch local basis in Kansas to see how are the local markets reflecting this. It's interesting to see the variation across the state. Actually, you look at the largest increase in basis that's occurred in Kansas on a weekly basis in hard red winter wheat. We've seen strength actually in the Colby area, northwest Kansas, at really a strong uptrend in basis. So we had been about 80 cents under, a little worse than that, weaker than that. Well, here of late we've gotten up to 60 cents under. So 20-some cent increase is no small thing out in an area like where we're at. Seeing general increases, some volatility. Also in the Dodge City area, Salina, Hutchinson, ups and downs in Topeka, had been pretty strong in the Columbus area, backed off a little bit. So Guy, in the midst of this, and given we've had, I guess, spotty exports, but enough strength in it that coming into harvest, winter wheat harvest in Kansas, we have actually seen the basis increase. Go ahead, Guy, then I'll mention sorghum.
Just related to the basis, just with what's happening globally, I sort of expect the board spreads to narrow in, particularly for Kansas, as we don't have a big crop. Those intermonth spreads on the board should tighten up a bit. That's actually a bit bearish basis, but keep in mind we're seeing the changes come into place in the September, which is our leading contract now on the delivery process, which that positions that Kansas wheat contract to be directly executable to export. And as those export markets tighten up, I think we're going to see the first response in that in the Kansas wheat, and then Chicago, and then later Minneapolis. We're seeing that at a good spread. That said, if we look at the class spreads between Chicago, Kansas City, and Minneapolis, as we rally this wheat complex, I think those class spreads are going to narrow up. Do you remember back when the conflict broke out in Ukraine and Russia? We saw wheat go to $13 just across the board just for wheat. I'm not saying it's going to go to 13, but I think $10 is definitely within the range there. But we'll see those class spreads narrow up between soft wheat, hard wheat, and spring wheat.
And just to finish up on wheat, hard red winter wheat exports, the last weekly data we had, July the 9th, running at 4.2 million bushels, and that's about 200,000 ahead of what we need to meet the USDA's projections. So positive sign. I want to mention before the break about grain sorghum, small changes in the grain sorghum supply demand balance sheet, stocks to use at 9.74%. Stocks to use, small increases in I guess food seed industrial usage. I guess I'd look at that as mainly ethanol usage up to 220 million for the current marketing year ending August 31st. No change for next year, 205. So not a lot happening in the grain sorghum side, but still we're probably waiting for China to resume being a major buyer, and we'll see if China decides to buy barley or sorghum from Australia or sorghum from the U.S., I guess.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Daniel O'Brien and Guy Allen as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our domestic and international grain market conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, as we continue chatting about the grain market, wanting to pick up with corn, and what are we seeing domestically?
The supply demand balance sheet for corn had some important changes in it. We're looking at that with a week's worth of time to digest it and for the market to respond. Did see the USDA make small changes in the production number. They changed the acreage a little bit, actually increased it based off the acreage figures off the USDA acreage report at the end of July. 95.343 million acres planted, no change in the yield. So, and I would think the big issue now, probably through September, October, will be any yield uncertainty that expresses itself. I think the acres probably not going to change much, although the USDA will be taking in Farm Service Agency numbers for planted or abandoned acres in these coming months. So that could be a change, but generally not a big thing, especially this year. But the supply demand balance sheet domestically did reflect some of the issues that they saw coming out of the stocks report also on June the 30th. And with the feed residual number for the current marketing year was raised 150 million bushels, no small amount, up to 6.35 billion. A little bit of a shaving down on FSI usage, basically took 25 million bushels off of the ethanol use figure down to 5.55 billion bushels. So overall domestic usage up 125 million. And that's from that stocks report. They did also, they left unchanged the old crop, the current marketing year through August 31st, their export number. But when they looked into that next marketing year and digested out of the old crop marketing year, a reduction of about 125 million bushels down to 2.02 billion, still highest in about 7 years, but a fair reduction, brought that lower stocks into the new crop marketing year, shaved a bit higher on production, and ended up and dropped supplies. But again, total supplies dropped because the beginning stocks dropped. As they went through the marketing year estimates for usage, everything was unchanged except for exports. So the USDA came in, raised the projection for next year's exports up to 3.2 billion. So this year, they're projecting 3.325 billion bushels, a record high. Next year, they're projecting almost as high, 3.2 billion. And I think probably the biggest issue that has the market's attention is that with these changes and a strong yield, 183 bushels an acre, we shaved down projection of ending stocks down to just below 1.8 billion to 1.79. Stocks to use instead of 12.1%, now it's 11.0%, and left prices unchanged. But in the way economics tends to move, if we would have anything that would tighten those stocks up further, you're getting into the area where you'll have enough scarcity where you'll start to raise prices up, probably have some rationing going on. So taking what the USDA has and just making one change, just going from 183 bushels down to 181 and a half, 1.5 bushels lower, still second highest on record for yields, you'd end up with ending stocks at 1.66 billion, stocks to use down to 10.21. If you take it down to 180 even, which is still second highest on record, you'd be down to just over 1.5 billion, stocks to use down below 10. And by my estimates here, the USDA is projecting it with their current setup, 183 bushels an acre. They're at 440. They're projecting for the coming year. If you shave a bushel and a half off in two separate sets, you're going from 440 to about 470, 475. If you go down to 180 bushels an acre, you're over $5. So I guess that just turns the burner up, Guy, in terms of the uncertainty we still to be dealt with in the domestic corn market. How about the international side?
Internationally, I want to start making a couple comments about the USMCA agreement, particularly with Mexico being the biggest corn buyer out of the U.S. Just there's a lot of noise out there. Trump administration decided not just to automatically renew it. They want to renegotiate parts of that. Some of that's with Mexico. Probably the biggest chunk they want to renegotiate with Canada. That seems to be moving forward. I don't think we haven't thrown the baby out with the bathwater. I think we're just negotiating for a better deal on that. Bring that back to the corn market. Mexico continues to import more and more corn. They seem to be more willing to do that. They've sort of dropped the non-GMO issue a bit, particularly in the wake of the cattle situation where the screwworm, where a lot of those Mexican cattle are now staying south of the border and being finished down there, which is increasing that corn demand. And I think our export numbers have some upside on that. Also, the comments I made regarding the Black Sea. Remember, Ukraine is a not insignificant exporter of corn out of that area, and all the disruption and supply chain issues that we just talked about in wheat in the last session apply to corn there as well. So that's going to, I think, lend itself to larger exports again coming out of the U.S. into a number of markets there as well. Shifting over to just the USDA numbers, looking at the 25-26 ending stocks or the next year's beginning stocks, they were lowered by 4.6 million metric tons. That's tightening that balance sheet up a bit. Global crop, again, was lowered an additional 3.3 million tons there as well. That's 1.295 billion metric tons, again, lending a bit of support to the market there. And that's expecting world corn stocks to decline by 6 million metric tons at the end of this year, again, lending a bit of support to those markets. They did reduce Mexico's imports of this current marketing year by about 300,000 tons, but I think we could make that fairly easily by the 1st of September, but we'll see how the July and August come in. But I think the potential's there to maybe not lose that much. Also, China's corn imports were reduced by 1 million metric tons to 5.0. They left 26-27 number unchanged at 6. We'll sort of see how China plays that. I think that those numbers are probably about right. Again, in the EU, they reduced that EU corn number because of the dry weather by 3.7 million metric tons. Again, that's going to lend support to U.S. exports there as well. So I'm sort of wearing my bullish horns today across a number of these commodities, which is a bit unusual, but it's sort of, I've had a paradigm shift over the last month, I'd say, Dan.
Well, I think the grain markets in the last few days have reflected that, with the run up we've seen in wheat. Well, when you look at the soybean chart, domestic CME August soybeans, they were at about 11.10 within the last month or so, ran up as high as $12, closed yesterday at at 11.91 3/4. So that's been positive, and saw a similar run up in corn. We did mention it before. That means the September corn futures contract ran to the high side, and we were just talking about wheat. Of course, wheat's ran up to levels that are within shouting distance of the highs we'd seen at the beginning, as you mentioned earlier. The Russia-Ukraine
taking corn up 50 cents since what was it, a couple months ago, and good strength there.
So if we'd had done this report on the 10th, we'd have a different view than we have right now, given what's just happened in last week. We should mention soybeans. We have a couple minutes left. Supply demand balance sheet did show some changes for the old crop marketing year. Still at 10.40 as a price, but they did end up through a number of small increase in exports. Did see the total usage number go up about 10 million, and any stocks down to 330 million, not changed hardly at all. 7.7% stocks to use. For the new crop marketing year, there was an increase in about 700,000 acres planted and harvested in their estimates for USDA's estimates for beans. No change in the yields. So you combine a 10 million bushel lower beginning stocks number, a 40 million bushel higher production estimate, and supplies up 30 million, and that was offset by about 30 million bushels higher estimate for exports, and you're in essence the same place in terms of stocks and stocks to use and price. So here we get pretty excited about corn in July, tasseling and reproductive phases. We tend to really be focused on beans in August. So yield uncertainty really hasn't come into play a lot yet, but along with the strong focus on what's happening internationally in the wheat, I would say from my domestic point of view, I'm really watching hot weather forecasts and whatever else comes out to see what we see for yields and how that ends up and changes the supply situation and our expectation of ending stock. So we'll see. So here we're doing this in July, bring on August, and we'll see if there's any weather risk to worry about.
So switching over to the global situation, Dan, the only really noteworthy change that I've seen there is an increase in Chinese imports. We've raised by about 1 million tons for both 25-26, up to 13 million metric tons, and then they raised next year up 1 million tons to 115 million metric tons. The other good news is really on the meal side of things. Non-China imports is expected to increase by nearly 7 million metric tons, up 4.2%. That's an equivalent of 330 million bushels of soybeans. Not a small sum, and that should lend support, particularly when we look at that crush situation as we struggle to clear that soybean meal, as that whole crush complex continues to be driven by the biofuels and the oil demand.
Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much.
That was the senior economist at the IGP Institute at K-State, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, how hot of weather have we really been seeing across Kansas this past week?
Yeah, so we had quite a few hundreds. They were mostly focused further west and southwest, where we still have drought. We did have a lot of drought improvements in June. Unfortunately, a lot of that moisture pauses are starting to go away pretty quick. When you get a couple of days of 90s and 100s, the moisture tends to go away and you lose it through evaporation and evapotranspiration. In southwest Kansas, with that longer duration dry period than what we've seen further east, and that allowed temperatures to skyrocket up into the hundreds for many days in a row. Thankfully, we had a break. We got a little bit more moisture in the atmosphere, and granted, we didn't get precipitation, but that just kind of helped cool things down throughout this week. And we had temperatures really only in the 90s for most of the state, and that and even some 80s. And that really helped bring some temporary relief to what was seemingly going to be a really hot period. Now, it doesn't mean we're out of the woods yet with heat, but definitely a break in what was a pretty good stretch of 100-degree weather.
Are we going to see any precipitation as we look forward?
Yeah, so like I mentioned, it's been pretty dry over the last week in really only isolated areas, the southern Flint Hills and I guess the Flint Hills in general. Got some spotty showers and thunderstorms that really, unless you got lucky and were under one of those, you didn't get much. We're kind of stuck. We're stuck under this ridge of high pressure, the highs over the Central Plains, and it's taken flow basically from the Rocky Mountains north into southern Canada, and then east through the Great Lakes, and then south to the Gulf, and then back west up into the northwest into the Rockies. So it's kind of spinning clockwise around us, but we're right in the middle. And so that means we really don't have a lot of weather changes expected through the course of the next week. We're going to keep temperatures warm, around seasonal, and then we're going to climb to above normal by the end of the weekend, potentially hundreds return. Then we got a push of moisture that we're watching by maybe mid next week that is going to basically wrap clockwise around that low and come out of the Rockies, which this moisture actually originated in the Pacific Ocean, where we had Elida, which is a hurricane right now. And that moisture is going to wrap over the northern Rockies and into the southern plains. And that's going to probably allow for one or two storm systems to push eastward across the plains and might actually, what we call kind of like take over that low. We basically put so much moisture, take over that high pressure, that pumps so much moisture into that high pressure, we start getting spotty showers and storms more widespread. They just bubble up in the afternoon. There's no wind shear, so they just sit there at one spot and then they fall apart. That's probably the pattern change we're going to see towards the end of next week. I don't think it'll be overly widespread, but really that's the greatest chance of moisture. No real big storm system expected until we really break down this high pressure. And I think it's going to be a wild summer. This is when we see these peak high pressure systems that are slow to move and very, very slow to change weather across Kansas.
Any good news for farmers looking up ahead?
Well, it depends on the farmer, right? Depends on when the crops are planted. We definitely are getting some growing degree days this summer, where I know last year this time we were really struggling with some heat units. So at least you're getting those, but unfortunately we need timely precipitation. And our eyes got to turn to that East Pacific again, off the Baja of California. We're expecting more tropical activity, and that's optimistic to at least bring some of that moisture up and around and into the plains. But unfortunately, confidence is pretty low. We've already started to dry things out, and it's going to take fairly big pattern change to bring more widespread precipitation in timely. And I'm not very confident that's going to occur just with this current pattern and without any bigger forcing coming in. And, it's the time of year for slow weather change, but we need some frontal passage or something to kind of push in on this high and shove it off. Or we need a really impressive hurricane to push in either the southwestern United States or in the southeast. And right now, those storm systems, the Southwest is contributing moisture, but those systems are all steering out into the ocean. So we're not really getting that big pattern change. And I think we're kind of status quo, likely drier than normal and warmer than normal through the end of July at the very least, and potentially into early August.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.